How's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. And today's topic, I want to discuss with you Medigap Plan N and fully explain it for dummies. So I don't wish to offend anybody with that. But let's say if you're currently looking to enroll in original Medicare and you understand that there's two major parts, Part A and Part B. Well, there's many things that those parts do not cover with the original Medicare, and there's certain gaps within those types of coverages that allow somebody to then purchase something additional known as a Medigap plan, or also known as a Medicare supplement plan. So what happens is when somebody's nearing age 65 or they hit age 65, typically they're automatically enrolled into Medicare Part A, original Medicare Part A. And what this does is it says that if you go to a hospital, you have certain expenses or certain procedures are covered under a Medicare plan. Now, if an individual just has Plan A, well, then they just have that hospital coverage. So many times individuals go and they purchase an additional, for an additional premium, something known as original Medicare Part B. So what happens is if we understand the hospital is something known as inpatient care, the Part B original Medicare is usually refers to doctors and different services that are deemed outpatient care. So you have certain things, the certain gaps within original Medicare are you have co-insurance, you have co-payments, you have deductibles, different things that could increase the heck out of your costs if you keep living, and you start to become frail and you start to have different types of ailments. Well, the older that you get, the more often you're most likely going to be going to a hospital, or more often you're going to be getting checkups with doctor's offices. And it's just, unfortunately a part of life. So therefore, individuals could go and supplement what these gaps are through these Medigap type plans. It's known as a Medigap plan, a Medicare supplement plan. So what are the most common Medicare supplement plans in the market? Right now, we have Plan F, which is going to be the most comprehensive coverage, Plan G, which that's one's my favorite, and that's the one that I highly recommend to individuals, or you also have Plan N, which is going to be the cheaper route of Plan F and Plan G. So most likely, if it's going to be the cheaper route, you understand that the coverage is not going to be as comprehensive as a Plan F or Plan G. So with this in mind, yes, you could go and shave some costs each and every month with going with a Plan N, but you want to understand what are the pros of a Medigap Plan N or Medicare Supplement Plan N, what are the cons of a Medigap Plan N, a Medicare Supplement Plan N. So you're going to see that word Medigap and Medicare Supplement used interchangeably, and all that's saying is the gaps. It covers the gaps that original Medicare does not cover. So once again, typically Part A of original Medicare, this is typically free of charge. Part B is an out-of-pocket cost to majority of individuals, is an out-of-pocket cost depending upon what your income is. And then you have an additional payment, which could be one of these Medigap plans, Medicare supplement plans. The importance of it is, pretty obvious. The longer that you keep living, then obviously the chances of you using this care are going to increase. So therefore, if somebody has the proper Medigap plan, they can go to their doctor's office. They understand that everything's covered from soup to nuts. If they go to a hospital, it's covered. If they go to a doctor's office, it's covered. If they need a certain procedure, that's covered as well. So let me go over into the Medicare and You Guide. And you can get this on Medicare.gov. And it's Medicare and You Guide for 2016. Understand if you're viewing this video in later years, well then make sure that you're referencing the 2017, 2018, 2019, whatever that year is that you're watching this video. When you go to Medicare.gov, you're going to be able to see Medicare and You 2016. Make sure you're not looking at the 2015 guide, you're looking at the 2016 guide. And what we want to do is we want to go to page 100. It's a very important page because what it says is Medigap policies are standardized. So how do I compare Medigap policies? Well, it says different insurance companies may charge different premiums for the same exact policy. If we know that, then we know if company A is offering a Medigap Plan F or a Plan N or a Plan G, whatever that case may be, and company B is offering a Plan F, Plan G, Plan N, we'll go with the company that's been in business longer, that's a higher rated company, that hasn't been shown to increase their rates each and every year, and that's at a cheaper cost. So the only difference, you have identical coverage. If you're going with a Plan N with company XYZ or a Plan N with company ABC, those plans are identical. The only difference is that the premiums that one plan is going to charge over the next. So I hope that that makes sense. So if we go down the list to page 101, we're going to see this whole guide, and let me make this a little bit smaller. And what we're going to notice is Plan F shows the most comprehensive coverage, and you see 100% of all these different costs covered. So if you did not have any of these plans, well, then we're going to see on this side the benefits. We say Medicare Part A would have a coinsurance, and you have certain hospital costs each and every year with Medicare Part A. Those are the specific gaps with original Medicare Part A. Original Medicare Part B has different coinsurance, has different co-payments. You could pay the first 3 pints of blood. Part A hospice care has coinsurance or co-payments. Skilled nursing facility care has coinsurance. Part A deductible, Part B deductible, Part B excess charges, foreign travel emergency. So that's exactly why you could go and cherry pick to a plan that's specific to exactly what your likings are. My recommendation is you want to make sure that you're getting set up properly the first time, because if you try to get set up with the correct plan later in life and you're deemed uninsurable, these companies can be biased. These companies can discriminate. If you have a certain ailment after the fact, after you're between the ages of 65 and 65 and a half, some companies may not offer you a specific plan. So that's very important to understand. So if we're going to the benefits, we understand that the Cadillac plan, the granddaddy of all plans, is going to be Plan F. And what that says is you could go to a doctor, you could go to a hospital, everything's completely covered. Now the major difference between Plan F and Plan G is there's a little part over here that says Part B deductible. Well, one of the things to always be mindful of, and I want this video to hit as many families as possible, with Plan G, the Part B deductible, the highest Part B deductible for the year of 2016 is $166. So if we're using very simple math, let's say if you have Company A is offering a Plan F for $200 a month, and that same company is offering Plan G for $100 a month, well, that person who's buying Plan G would be saving themselves $1,200 a year. The only difference between Plan F and Plan G is that $166 Part B deductible. So that means worst case scenario, if you go with Plan G in that scenario, in that example, that person is saving over $1,000. So please, if you understand the comprehensive coverage of Plan F and Plan G, go with a Plan G if it is being offered. And if you're turning 65, you're 65 to 65 and a half, get set up with that properly and make sure that you're getting locked in with your insurability. Now, if we go over to Plan N over here, we're going to see a little asterisk over there. We're going to see certain gaps over here. What exactly does this cover? Now, understand, Plan N is still an excellent plan, but you have to see exactly where, some of those gaps may fit. So over here we have Medicare Part B coinsurance or copayment. So when we look at this little asterisk, if we go down a little bit further, it says Plan N pays 100% of Part B coinsurance except for a copayment of up to $20 for some office visits and up to a $50 copayment for emergency visits that don't result in an inpatient admission. So what that means is you could go to a doctor's office, but you might be paying up to $20 each time that you go. So if you're going 10 times in a given year and you had Plan N, well, now that's $200 extra out of your pocket, or it could be up to $200 extra out of your pocket. Also over here we have Part A deductible. That shows 100% covered. First 3 pints are 100% covered. The hospice care coinsurance is 100% covered. The coinsurance for Part A and hospital costs, that's 100% covered. So obviously it's a very good plan. Skilled nursing facility, 100% covered. Part A deductible, which I already mentioned, is 100% covered. Part B deductible, we have a little gap over there. So that's still $166 that you'd have to pay up to that deductible each and every year, just like how Plan G was. So you would have obviously the co-payments, and you would also have that deductible as well. Part B excess charges. This is something that is a little bit tricky for people to understand. Basically, whenever somebody goes to a doctor and that doctor approves Medicare, well, the doctors can either accept the assigned rate, it's known as assigned rate from Medicare, or they could charge up to 15% extra on these quote-unquote assigned rates. So what an excess charge is that extra charge that a doctor can charge up to their specified limit if they, if they don't deem that this is an assigned rate, or they could go above what those assigned rates are. So if you have a specific cost for $100 and the doctor wants to charge 110 or 115, well, they can up to a specific limit. So understand those are excess charges, and those things can obviously increase in cost and increase your costs. So, but if you basically have to see which one's relative to your specific situation. If you're saving $1,000 a month from a Plan N to Plan G, and you're kind of doing the math, and you say even worst case scenario, scenario, if I get, really sick, what exactly is going to be my max out of pocket with that? Understand it's still an excellent plan. This is why these three are going to be the most popular ones. For some reason, Plan F is actually the most popular. If individuals learn more about Plan G, they should 1000% go to Plan G, because if you're going to save $1,000 and the worst case scenario is you're going to spend 166 more than Plan F, and then therefore your total savings is going to be over, $800. Well, with simple math, it makes perfect sense to go with a Plan G over a Plan F. Now, companies are going to try to push a Plan F, or, a lot of agents try to push a Plan F because, unfortunately, it's a higher premium and therefore could be a higher commission in their pocket. As I go to my third bullet point, always be mindful of when I say compare plans. If you have, company A that's offering a Plan N for $100, or you have company B that's offering a Plan N for $150, understand that Plan N coverage is going to be identical. All those coverage, the same doctors that are going to be taking regular original Medicare are going to be able to get paid the same exact way regardless of whichever company you choose. Now, when you're comparing the plans, you want to make sure that this was a company that didn't just recently hit the Medicare supplement market, that now has no clients, because the way that insurance works is the law of large numbers. So what's happening is you're pooling the funds of each individual. So you have healthy individuals that are essentially paying for the individuals that are going out on claims. So it's minimizing all that risk across the board. So when you have long-standing companies that have been in business for 30, 40, 50 years, well, that's typically a much better company, or what's shown to be that company might not be raising its premiums as drastically as the one that just hit the marketplace. So understand that also, as you're getting set up at age 65 or 65 and a half, those companies or those plans can increase their premium each and every year, and they do, because they understand that the older that you're getting, they have to now shift over that risk, and if it's going to be a larger risk on their books, they're going to transfer that risk directly to the consumer. So therefore, you might be paying something like $100 a month, and then all of a sudden 3 years later see an increase to $150 for that same exact company, for that same exact plan, because now you're age 68 at that time. So that's going to be a higher risk based upon their books, and therefore you're going to have to absorb the cost of that risk. So we want to make sure, and that's one of the other reasons why Plan F has statistically shown to increase their premiums about 9% per year across the board, as opposed to Plan G, which only has increases about 3% per year. Plan N is very good type of policy, but just understand some of the gaps with the Plan N. It's still going to be much better than all the other ones below it, but kind of pick and choose, or pick your poison on which route you want to go. Do you want to have that peace of mind for a monthly premium that you're just paying this premium and everything else is covered? Or do you want to shave a couple of dollars off and kind of have that risk over your head, later on? Now, lock-in insurability. This is very crucial, and I touched up on this briefly in the beginning, as I said that if you're age 65 to 65 and a half, well, now you're eligible for open enrollment with the Medicare system, or the Medigap plans. Now, understand, you could change, if you're 67, 68, you could change your Medigap plan, and this is a large misconception. You could change your Medigap plan 365 days out of the year. Now, obviously, I wouldn't recommend that, but what happens is if you're eligible, if you're insurable, you could be set up in a Plan N, and then a couple years later switch over to a Plan F. Understand that you would have to go back through underwriting. So when you're locking in your insurability, many individuals automatically go with Plan F because they said, okay, this is the Cadillac plan. Maybe I might not be unhealthy right now, but when I'm hitting, late 60s, early 70s, late 70s, I'm happy as all heck that I was able to purchase that Plan F at inception when I was healthy, when I was able to receive that coverage and be able to get accepted by a company, as opposed to getting set up in a crappier plan, excuse my language, a crappier plan, such as a Plan N, and then now all of a sudden you're starting to come into all these ailments, go to the doctors frequently, and when you try to switch over to a Plan F, they could discriminate, because you're not in that open enrollment period anymore, so they could discriminate and they could deny you a plan, and that's all across the board. So one of the things that we come in is we have access to all the top carriers, and then we try to go and educate you guys on what are some of the best Medigap plans available for your specific situation. What was your past history, maybe your past family history, how often did maybe they go out on claim, to kind of get a general idea on where you want to shave off costs the best way possible. We specialize on retirement income planning. We deal with a lot of retirees. So we understand more than anyone how important saving each and every dollar is in your retirement. Because retirement, you typically have fixed income sources. You might have Social Security, you might have pension, you might have annuity income, whatever the case may be. Those are typically fixed income sources that you want to make sure if they're fixed and you have inflationary expenses, such as a Medigap plan could be an inflationary expense, because the older that you get, the higher that your premiums will be each and every year. So you want to make sure that you have correct income sources covering that out, and then that you're shaving the costs any which way possible. If you're currently watching this video and you're thinking about getting set up in a Medigap plan, please give us a call and we'll make sure that you're set up the right way. If, let's say, you were already in a Medigap plan and now you want to try to receive a cheaper premium, give us a call and we'll show you which companies would accept your specific underwriting requirements in your particular area. So once again, it's all about getting the best quality at the cheapest possible price, putting more dollars in your pocket. If you could save $1,000 a year or something as small as $500 a year, well, now that's the extra vacation that you need, or the extra flight that you could go visit your grandkids, whatever the case may be, whatever your specific situation suits you. But at the end of the day, it's all about making sure, okay, how is this plan? What's structured? What are the gaps with the original Medicare? Why exactly is it important to get set up in a Medigap plan? And then, my recommendations are either Plan N, Plan F, or Plan G. My main one is usually Plan G, or Plan N. Just let me know your thoughts, and we have specialists standing by. We offer 24/7 customer service, meaning you give us a call mornings, nights, weekends, holidays, whatever the case may be. We are A+ rated on the Better Business Bureau. We've always had very good reviews. We've never had any complaints. It's because of this methodical process. Thank you very much, and feel free to subscribe to our YouTube channel, Retire Sharp, so you could have access to the most updated videos. Thanks so much, guys.